You might think that what happens in Japan doesn't really matter for your portfolio, but this week it absolutely does. For the first time in 30 years, the Bank of Japan just raised interest rates to 0.75%. That might sound very, very low, but for Japan, it's a huge shift after decades of ultra low rates. So, why should American investors care? Well, firstly, Japan has been a major source of cheap money for global markets. So, for years, investors borrowed money in Japan at near zero rates, and then they used it to buy higher returning assets like US stocks, US bonds, and even crypto. This is something that they call the carry trade. It's just borrowing money for very close to free and then turning around and using it to buy investments with a much higher yield and keeping the profits. When Japan raises rates, though, that trade becomes less attractive and borrowing yen gets more expensive. And in extreme cases, investors are forced to sell US stocks and bonds to pay back their loans, which can cause sudden market volatility. Usually it's short lived, but it can be messy. The second reason you should care about what's going on in Japan, and this is a longer term issue, Japanese investors own a lot of US assets. Years of low rates pushed Japanese pension funds, insurers, and everyday investors to buy US treasuries, US stocks, and other foreign assets. If rates in Japan keep rising, those investors may decide why take currency risk overseas when returns at home look better. If Japanese money starts flowing back into Japan, that could push US bond prices down, US interest rates higher, and could increase borrowing costs for mortgages, car loans, and businesses. That's how something happening in Tokyo can raise borrowing costs here in the US. Now, to be clear, this isn't an immediate crisis. The Bank of Japan is moving very slowly, and Japanese investors are still buying foreign assets for now. But if Japanese rates eventually move towards 1 to 2%, this could have a gradual but real impact on global markets, including ours, especially as we are lowering interest rates at the same time. So the bottom line is that Japan ending ultra low rates isn't just a Japan story, it is a global liquidity story, and American investors should be paying attention.